Taxes can be overwhelming, and many people pay more than they need to simply because they aren't aware of the available deductions, credits, and strategies to reduce their tax liabilities. This is where accountants come in. They're experts at navigating the complex tax landscape, ensuring that you take advantage of every opportunity to save money. Whether you're an individual taxpayer or a business owner, an accountant can provide valuable insights and strategies to help you minimize your tax burden. In this video, we'll explore the top 10 ways accountants can help you save on taxes. 1. Maximizing deductions and credits. One of the most important ways an accountant can help you save on taxes is by identifying all possible deductions and credits available to you. Deductions reduce your taxable income, while credits directly reduce the amount of tax you owe. Accountants are skilled at spotting opportunities such as education credits, mortgage interest deductions, or medical expense deductions that you might overlook on your own. Tip: make sure your accountant knows your full financial picture, including your income, family situation, and any significant life events like buying a home or having children, as these can open the door to additional credits. 2. Optimizing retirement contributions. Contributions to retirement accounts like IRAs, 401ks, and other retirement savings plans can reduce your taxable income. An accountant can advise you on the best retirement accounts for your financial situation and help you maximize your contributions to minimize taxes. For example, contributing to a traditional IRA or a 401k allows you to defer taxes on that income until retirement, lowering your tax liability today. Tip: work with your accountant to determine the optimal amount to contribute to your retirement accounts each year to maximize tax savings. 3. Tax-advantaged accounts for health expenses. Health savings accounts, HSAs, and flexible spending accounts, FSAs, are great tools for reducing your taxable income while saving for healthcare expenses. Contributions to these accounts are tax-deductible, and withdrawals for qualified medical expenses are tax-free. Accountants can guide you on how to use these accounts effectively to save on taxes while covering medical costs. Tip: consider setting up an HSA if you have a high-deductible health plan, HDHP, as it offers triple tax benefits. Contributions are tax-deductible, growth is tax-free, and withdrawals for qualified expenses are tax-free. 4. Maximizing business deductions. For business owners, an accountant can help identify various business-related expenses that can be deducted, reducing taxable income. This includes office supplies, equipment, business travel, meals, and more. An accountant will ensure that you're taking full advantage of the deductions available to you as a self-employed individual or small business owner. Tip: keep detailed records of all business expenses throughout the year, and consult with your accountant regularly to ensure you're not missing any potential deductions. 5. Planning for capital gains and losses. An accountant can help you manage your investment portfolio in a way that minimizes taxes on capital gains. For example, by timing the sale of investments or offsetting gains with losses, known as tax loss harvesting, your accountant can reduce the taxes you owe on your investment income. Tip: work with your accountant to evaluate your portfolio and develop strategies to minimize capital gains taxes, especially if you plan to sell investments in the near future. 6. Taking advantage of tax deferral strategies. Tax deferral allows you to delay paying taxes on certain income until a future date. An accountant can help you set up strategies such as deferring compensation or income through tax-deferred accounts like annuities or employer-sponsored retirement plans. This can be particularly beneficial if you're in a higher tax bracket now but expect to be in a lower one during retirement. Tip: ask your accountant to help you explore tax-deferred income options, such as tax-deferred retirement accounts, so you can reduce your tax liability in the current year. 7. Claiming home office deductions. If you work from home, you may be eligible for a home office deduction, which allows you to deduct a portion of your home's expenses, such as mortgage interest, utilities, and insurance, based on the size of your home office. An accountant can help ensure that you meet the qualifications for this deduction and claim it correctly. Tip: to qualify for the home office deduction, your office space must be used regularly and exclusively for business purposes. Consult your accountant to ensure you meet the criteria. 8. Planning for family and dependent deductions. Families with children or other dependents can benefit from various tax credits and deductions. Accountants can help you navigate credits such as the child tax credit, dependent care credit, and other tax breaks available for families. They can also advise on tax-efficient ways to save for your children's education, such as 529 plans. Tip: keep track of your children's education expenses and childcare costs, as they may qualify for tax credits and deductions. Consult with your accountant about these opportunities. 9. Utilizing charitable donations. If you make charitable donations, an accountant can help you maximize the tax benefits of your generosity. Charitable contributions can be deducted from your taxable income, and an accountant can advise you on the best ways to give, whether through direct donations or using donor-advised funds. Tip: keep detailed records of all charitable donations, including receipts, and consult with your accountant to ensure you're following the correct procedures for claiming these deductions. 10. Strategic tax planning throughout the year. Rather than waiting until the end of the year to review your taxes, working with an accountant throughout the year can help you make strategic decisions to reduce your tax liability. This proactive approach includes things like adjusting your withholding, reviewing your investment strategy, and planning for major life changes, such as marriage, buying a home, or retirement, that could affect your taxes. Tip: meet with your accountant periodically throughout the year to ensure you're on track with your tax-saving strategies and to make any necessary adjustments. Taxes don't have to be overwhelming when you have a knowledgeable accountant by your side. By taking advantage of the strategies outlined above, accountants can help you save money, reduce your tax liability, and optimize your financial situation. Whether you're an individual taxpayer or a business owner, an accountant can provide personalized advice to ensure you're making the most of available tax breaks and deductions. By working closely with an accountant, you can feel more confident about your financial future and keep more of your hard-earned money.